Hey guys, happy Monday. I want you to remember that it is the last week of the month. And so that has its own weird trading dynamic. And especially because Mondays are always light earnings days, you can't really take Monday and carry it through the rest of the week. But I do want to kind of go through just the briefest stuff. I am going to do follow up on China because even though I try to stay very apolitical and out of it, I have to. This is just the worst reporting of the CCP and takeaways I've seen ever. Actually ever. And it's like I can't tell if the academics are being taken out of context or if they're literally just regurgitating what's saying for a reason. They shouldn't, because these academics are coming from universities that are outside of China. And they have long careers outside of China. So there shouldn't be like an issue. Plus, you're an academic on top of it. That's who I usually leave certain things to be said to, so that I don't get beaten. But this is just probably, I mean, it's just dumb. I'm going to show you. Anyways, let me go ahead and share my screen. Past performance is not indicative of future returns. Again, today you can't really take much into consideration because Monday is a very light earnings day. And these WR Berkeley and Zion's really happen after the close. And they're not, because we've had enough insurers come out, that's not going to be the thing that breaks the camel's back, if you will. And Zion National Bank, it's just not big enough for it to matter. I will talk very briefly through the fact that, here is what I've seen thus far. So I have about 88 of my companies having already reported. And in a couple of them, I missed the replay. It is what it is. A few of them as well, they don't have a call this quarter because they've been acquired. So they're not going to do anything but issue a release. So when I look across the spectrum, I do have about 55% of companies still showing top line and earnings growth. Now, has it slowed from previous quarters? Possibly, but I still count that as pretty awesome, given that you've got massive GDP issues in other nations. And so because it's the S&P 500, most of the companies, not the regional banks, okay? Most of the companies do have international exposure. Obviously, if you're a regional bank, or maybe less obviously, if you're still getting up to speed on what these companies do, the regional banks do not have international exposure. And for the most part, a lot of the banks did okay, but more than any other quarter, there is absolute bifurcation. You have some banks that were not attractive this quarter in any way, shape, or form. That was a terrible quarter. And that just has to do with how they hedged, how they laid out different types of things that they decided they were going to do on the quarter, and how their businesses, what exact business lines they're in. One of the weird things across all of the banks this quarter, which cannot get ignored, is the fact that very few of the bigger banks increased their CET capital reserve. That's not normal, given how bad GDP is. It's a very intriguing point. Some of the regional banks absolutely did, and that was because of the increase in net interest margins. Because rates have increased and net interest margins are higher, they had more cash to do that with. So it's really fascinating. Our banking system, largely speaking, despite the ones that I was not impressed with, is extremely strong. The consumer is still showing fairly strongly, even though a couple of banks, more than one, did take in a bit more for reserves on credit losses. The major earnings that I think that's why you have to almost throw away whatever is happening today, because you have Google and Microsoft coming out tomorrow. You really kind of have the people kind of playing games with this today and resetting those two particular, because if you look at how much they've gotten clobbered from last quarter, where they did a reasonable job on earnings, that kind of is what it is. So you've got Microsoft up 51 basis points. Let me hit the reset button. Microsoft up 150 plus basis points. Google up 1%. Tesla getting hammered. I already told you why that's getting hammered. You just have to kind of play around with it and try to take a position where you can, because actually Tesla is one of the strongest earners this quarter period, with huge top line growth, every dollar brought down to operating income and below. And I really don't care what these folks have to say about how the cash flow and how the inventory increased. You're going into the fourth quarter. That is what is supposed to happen. It's actually very annoying when I then listen to all of these things and I'm like, what are you talking about? We still have a car shortage. You know what I mean? But whatever, let's just move that to the left. But it's a huge earnings week this week. And so you do have to be really careful how you think about and how you listen to different people that are playing like it's a trading situation that's happening, but whether or not the company is going to reflect a particular way is a different story. Now, GM will also report tomorrow. I like Ford better than GM if you're going to play between the two, just because of what I heard last quarter from GM and where they're at as relates to electric vehicles, as relates to, workers, trucks, that sort of thing. Sorry, forget what they call it. Light trucks. Yeah, whatever. Anyways, the trucks that people use for actual work. Okay, that's what we're talking about. All right, so I like Ford a little better than GM on that. And then we've got Amazon on Thursday. Amazon, I do not anticipate it to be a good quarter, except that Amazon sometimes no one cares because we're looking at the fourth quarter. We know Prime Day wasn't good, so it'll be interesting what they have to say. The cloud business is probably fine. So that one, I'm going to stay out of a little bit. I think I'm largely going to be out of this market and just coast through the quarter or through the month. Okay, let's get into China and then we will move on very quickly. There are three things that people are on and on about: zero COVID policy, the solidification of his leadership, and the fact that he's not going to open up China. And here's what I have to say to everybody that's making these comments. Are you joking? Like, what did you think was going to happen at this meeting? Okay, so like, here's a quote that I took from, I think Yahoo Finance reporting on what someone said on CNBC, right? And it's like, it becomes clear that no other political elite dares to challenge his policy. Or, okay, has that not been clear for like 5 years? Is my first comment on that. I mean, who was it not clear to? Someone in Taiwan who was it not clear to? There should be no one that thought, oh my gosh, I wonder if his people are going to be initiated into, no, like what? I don't understand, right? That's the first thing. The second thing has focused, mistakes. So this has to do with then the idea that no one's going to like say that he made mistakes or deviate from his preferred policy agenda, which is focused on favoring the state sector at the expense of the private one. Okay, oversimplification, which I'm sure this professor knows, oversimplification, because he did come in to office specifically for that in 2013, which was to get rid of all the corruption. So at that point, it became a free-for-all. And if we were confused at all that that's what he was going to do, what do you think the whole Jack Ma incident was about, a while ago at this point? So I'm not quite sure like how this is news in any way, shape, or form. Now, as you know, as relates to China, we have been and have continued to discuss the fact that companies like Baba are severely undervalued despite a very weak economic condition right now in China. If you would have gotten legit conversation, which apparently no one in the press has done. So I'm sure it exists because I know that I'm not the only China person out there that actually has their head screwed on straight. Here are the things that you really should have taken away from the meeting. Number one, he was very quiet about what actual economic policy was going to be, COVID policy going forward. All he did was reaffirm that he was right. Okay, look, there's not a leader on this earth that doesn't do that as soon as they get reinitiated into their office. But what he didn't do is he did not discuss whether or not he was going to have 5% GDP. And I think the reason he did that was because we still have our elections. And given how everything is laying out globally, it's not to his benefit to try to discuss the grand opening of China in front of the US election, because it would necessarily like have an impact on our elections, period, right? So he's very clearly not going to say anything until after our elections. If that wasn't clear, there was the possibility he might sneak one in. Nope, he said nothing. So we will not now. So the thing that you should have taken away is the timing will be after the US elections. So if you're playing options, if you're playing vol, that is one takeaway you can absolutely have. The second major takeaway that you can have on this is that he is not going to state, or alternatively, the second takeaway is that he's willing to give up economic growth if it's in his best interests to do so, given what he has to do as the leader of China to navigate the US and Russia. right? So if it means that he's got to dial back growth so that he doesn't piss off Russia, who he's getting most of his oil from right now, he's willing to do that. I think that's what I took away from it. And that's dangerous for us, but it isn't nearly as bad as what everybody else is saying. Okay. The third thing that I would take away from it is that he's also totally willing to keep his cards of strategery in his pocket against Europe. Okay. So that is not great, but it does mean that he wants everybody to come to him on the negotiating table. And guess what? Unfortunately, for the way things have laid out, we've laid out the perfect conditions for him to do that. And so that kind of sucks. But like I said, timing will be after the US elections or midterms, excuse me, after the US midterms. And probably this is a first quarter scenario is the way that I'm reading it, which is why I've been saying along, don't stick your options in November and December, try to dial them back earliest January, but probably like January, February, March. And with that, that's all I had prepared for today. Questions?
So you think this is an overreaction to China?
It's an overreaction because he didn't really do anything other than what you should have expected. If you okay, there was never any kind of question in my mind that he was going to say zero COVID is awesome, right? What else do you say? You just close down all of, you're not going to be like, oh, my bad. Now that I'm leader, I'm going to go ahead and pretend like that wasn't the right call. He did it for a lot of reasons, of which the conspiracy theories, which in this case, I agree with them, was to make sure that no one came at him during the entire last year, right? And that worked. So I can't see him being like, oh, my bad, COVID was a bad idea, because the reason he had to do it, in my opinion, was maybe 75% COVID, 25% something else, and then other people have different odds, right? So in economics, as far as that goes, him saying nothing about 5.5% GDP, that could have gone either way, in fairness. Even if he would have said, oh yeah, we're going to return to 5.5% GDP, it would have been kind of aggressive with 2 months left in the year, number one. And number two, I kind of get it. Like it is the smarter move on the daily, given how global geopolitics is progressing and what he most likely will have to do in the next 3 months, let alone in the next 6 months. Like I don't get where everybody's at, that this was some kind of, oh my God, shocker, A, or B, oh my God, this is the most bearish thing. All it really does is push out timing.
Right. So you would be looking at BABA to build a position, right?
I mean, for me, I'm looking at options because the options vol is trading a particular way.
Okay.
But like at some point, especially like, do I think you should go? Yeah. So my timing hasn't changed. My timing has been and will continue to be January at the earliest. I wasn't thinking that he would somehow coast into the end of the year. And I was like, I thought maybe you might get lucky. But if somebody said, May, what's odds that he actually comes out immediately afterwards and says like awesome sauce, I would say like, I would have put like 10% on November and then 20 on December, 30 to 40 in January, because sometimes China will come out on the new year and be like, this is our plan, our grand plan. But like, I mean, whoever was thinking he was going to come out right away and be like, COVID worked and now we're going to be like done with COVID, that's very aggressive.
Okay. The U.S. market is trading on, what do you think about 2003 earnings?
2020 earnings? It's going to vary company by company. And part of it is that most of the companies that have reported thus far are not what I would consider a part of industrial America. It's been, so the trains came out and they're doing great. So in fairness, I get it, they're industrial companies, but they're more transporting stuff around than they are actually making stuff. Tesla, crazy good quarter because of lower input costs, but as well because they just strategically knocked the ball out of the park. So bad with sports.
That's correct. Yeah.
Knocked the ball out of the park. I mean, they strategically crushed it.
Versus what the Yankees did.
Sorry. Oh no, I don't want to, like, more than politics. I'm afraid to take a side on that one. but yeah, like he's operated that company in a way that you have to give the man credit for. So Tesla is the first company that actually manufactured stuff that came out and really talked to us about it. Some of the other companies are all over the map. So for example, Dover did a decent job. They're a rando industrial company in some ways, but they basically adjusted their operating model enough to even where, with revenues not being where they were at, their cost structure is much lower. So we've had 2 years of industrial companies right sizing isn't the right word, doing a series of strategic events to make sure that their companies were in strong operating order. And my suspicion is that despite the lower demand, which most were not really expecting huge pickups until 2023 with the infrastructure bill finally coming through and seeing some light, it's, like, that's what I need to see to understand which direction we're going. Because if that infrastructure bill allows for you to see a certain picture that supports the slowdown in industrials and other places, then we get a really cool situation happening where the US legit does okay while the rest of the world does not.
Yeah, Tesla also, they're cutting prices in China. So I don't know.
Well, if they keep margins a certain way, that's probably okay. I mean, their operating margins relative to other auto manufacturers is pretty phenomenal.
Yeah, good point. Got it. Okay, thank
you. In fairness as well, the raise in prices in the United States is due to what we're experiencing inflation that China is not. Like I said, 1 to 3% inflation is what they have. So I'm not sure what precisely. I have to read the release. I don't think I've had a chance to digest it, but it kind of depends like on what's going on there on operating costs, that they might be actually okay to do so in China. Other questions?
That is all I have. Morris, do you have anything?
I love Morris. You guys,
no.
If you're day traders, you'll see Morris as a regular on Richard's show as well. Welcome.
Hi.
Cool, everybody. Take care. Have an awesome day. Stay healthy. Try not to catch everybody's cold out there.